What up, y'all? It's your man, Abuamerican, here with a Blockchain Bros special with two special guests, my homies, Charlie from Cultivate Crypto. Jeez, I'm tripping over my tongue. Okay. And I actually don't know your name, Dollar Cost Crypto, man.
Yo, it's Miguel. What's going on, man?
Miguel. My bad. And Miguel.
Oh, you can just clearly guess by the name, Dollar Cost Crypto.
Yeah. And of course, we got Dimitri here, my co-host, who's always here. Man, guys, welcome to the show. I really appreciate you guys coming on.
No, I really appreciate the invite. And it's been good. I think the last time we talked in depth was during one of those dude parties, those fun times. But I've been seeing you on Twitter getting after the crypto stuff. So that's been awesome to see. And I know you mentioned a little bit about Ethereum mining during there. So I'm really kind of interested to kind of pick your brain on that as well.
Absolutely.
So I got
strong opinions on this, man.
Perfect.
Yeah, watch out when you say picking out a little bit about Ethereum, because when he starts about it,
oh gosh,
he never stops.
I get heated. Let me just put this out of here right now. I'm not advocating violence or anything. I'm just saying, if I could get a hold of Vitalik, I'd put him in a noogie.
Oh, we could sort that out. I know a few people who have connections, but I don't know. I like the guy, so we'll kind of keep him. We'll kind of keep him safe. No, I'm joking.
You like the guy?
Well, I met him once here in Tokyo, actually. I met him here in Tokyo. He actually, John was trying to get him to give him a sales pitch on Ethereum when Ethereum was like $500. Mm-hmm. John was like, why should I buy Ethereum? And Vitalik was just like, buy it if you want. Like by that time, Vitalik was like a billionaire. It was like, wow. It was around August of 2017. Yeah, it was this underground event in Tokyo at a bar in Shibuya. It was just like maybe like 100 people. And I did not understand one word of what he was saying. Like, he was talking all this blockchain stuff, and I was just brand new in crypto at the time. Just like, but I knew what he was talking about was important. So that kind of got me, interested in looking at crypto. So, I can kind of credit him, for kind of getting me to kind of see the light with Ethereum's price increase, but then also the information that I needed to learn, because at that time I knew nothing. But I know he's hitting those miners hard, so I got you on that.
Oh man, before we get into that, let's do a quick introduction, because my crowd is mostly Muslims, and I get a lot of questions on crypto ever since I started the Blockchain Bro show with Dimitri here. What do you guys do? Who are you guys? What do you do?
Good question. Miguel, go ahead.
Yeah, sure. Hey, I'm Dollar Cost Crypto. I, YouTube, podcast, Twitter troll. and my specialty is pretty much like portfolio reallocation and basically fundamental analysis. So I just look into cryptocurrencies, whether they're good or not. Are they scams? Are they not scams? And like sometimes things are in the middle, and I just say, this is my gut feeling that I think it is, but sometimes you just don't have the information because a project's really new. You don't have much to go on sometimes. Mm-hmm. So kind of intuition sometimes is kind of what you need to kind of lean on. And I know a lot of you guys, especially you two, once you guys have been around the block a little bit, you start noticing patterns with things, and that's kind of what I really do, is just pattern recognition.
Nice. I really need to talk to you after this.
Sure.
I got a project, man. Dimitri knows the project.
I got you.
Good stuff. So basically I'm Charlie from the United States. I've been in Japan now for about 10 years. Love it over here. Tokyo is an awesome city. It's been pretty good over the last year. And I was thinking, maybe I should go back, but after 2020, I was like, maybe not. So it's nice over here in Tokyo. And I've been in crypto since 2017, bought Ethereum at $90. Once it got to 400, I was like, maybe I should research some of this, right? And so I've been figuring it out pretty heavily over the last 4 years. Basically every single day, just studying crypto for several hours a day. When I was working before, I've been full-time crypto since September of 2018. I quit the corporate job, lived on trading for the first bit, right? As I was building the business for cultivatecrypto.com. I started that in January of 2019. Me and John started the Tokyo Crypto Show on John MLD, Modern Life Dating's channel. That's how I met you. And then, we were telling people for like a year and a half to buy Bitcoin under $10,000. Everybody thought we were crazy. And then, we're doing good now. And so now what we're doing since September of last year is we have this course called the Crypto Mindset course. Because in 2017, I had nobody around me that was like, hey, here's like at least a point in the right direction of what you should be doing with crypto, right? It's kind of like trial by error, trial by fire. And like me and Miguel, we've made all the mistakes in the book, right? Like you got to learn all the, just by doing, right? And there's a lot of that. So I would say, Miguel's superpower is like fundamental analysis, looking at the research behind the coin. I'm more like a technical analysis, looking at the charts. And then we put those two bits of information together, which actually is quite a powerful combination. And we teach people how to do those things for themselves so they can become sovereign individuals and control their cryptocurrency by themselves, and do so in a way that they don't get wrecked, because there's so many people, right, in the bear market, also in the bull market, who lose money. So we try to make sure that everybody has at least a good baseline foundation, and then can build on top of that if they keep with our group, which we call the Moon Gang, throughout the crypto mindset courses that we're doing here throughout the year.
Nice. So do you guys in your Moon Gang group, do you guys do signals? I mean, I hear a lot about this. I mean, I got a homie. He started trading 2 months ago. He got into mining and into trading. Nice. And in 2 months, he went from starting with 72,000 British pounds. He's now at 390 win. 2 days ago, he showed me a position that won him in some sort of crypto trading that made him 90,000 in a day.
In a day, wow. What's he doing? Putting that on like 100x leverage or something?
I guess so. I don't know what he's doing, but he's like, send me some Ethereum and I'll get you 5K in a week. I was like, okay, I just sent him a bunch of Ethereum. I said, here, take all this.
Nice.
You guys, because he's saying he's following signals of like, some pretty reputable traders. You guys do signals or anything like that?
We have a couple subgroups, right? So basically, we have the Moon Gang, which is just a show that we do every Sunday on my channel, which is Cultivate Crypto on YouTube. And then that's what we call the group of people who follow us. And then so we do YouTube 5 days a week, absolutely for free. So all of our information's out there for people to watch. So anybody who wants to come onto our channel, onto Cultivate Crypto, or Dollar Cost Crypto also has a YouTube channel. Come over to our channels, figure out what we're doing for free. You can make money for free just by watching what we do. I do the charts every single day. I don't give like in-depth, like this is what to do, but I can tell you like generally what is kind of happening with the charts, and then allow you to do your own research and make your own decisions. But then when you join our group, right, we do have, as we have right here, the crypto mindset course, which then gives you your foundation. Builds upon that, we have a beginner level part of the course, which is maybe the first third of the course. We do about 20 webinars over 10 days. So we do a third for beginners, so everybody gets on the same page from the start. A little bit of review for the veterans. Then we do the middle part, intermediate, and then we go into advanced subjects and just turn on the fire hose of knowledge and just let it loose. So it gets pretty intense by the end of the course, but it's good information that people can go back and review because it's recorded. But then I do have another group where I do give signals, and then I give the logic behind what I'm looking at the chart, so that people can learn to do the charting themselves as well. I think a lot of people who give signals, they just say copy pasta, do this, and you'll make money, which is kind of dangerous in my opinion. It can have a lot of success, but I think it's really important that people do try to do their own research and become self-sovereign in this space, and be able to at least be chart literate, and then have the idea of what fundamental tools they need to understand in order to be successful, because so many people just rely on others in this market, and that can be good for a short period of time to make a bit of cash, but then you should probably figure out kind of the method behind the madness. And I think a lot of people just don't have the stamina to kind of keep with that over time. But if you do, then you can be successful in this market and go from making some riches and making some money to making some long-term generational wealth, which I think is the more important goal to being a self-sovereign individual. And then, we have several of those types of, services. We also do have an algo service, which is an automatic signals service where it goes through an algorithm that we've developed through the Python coding language. And so we're improving that throughout the year as well. So we do all those things, but we make sure that we give people an education as well, so that they can use, the gray matter between their ears that God gave them in order to, figure this out for the long term, because we're not going to be here forever, right? We're human beings, right? And there's some other people that they need to take the crutches off and they need to be able to walk themselves. So that's what we try to do for people.
Nice, man. So before I go into, before I go to my next question, let me ask you this then. In terms of like trading and whatnot, we look at DeFi, decentralized finance, and like all the projects that are taking place there, NFT, this, that, the other. People are now actually like, you can leverage your your crypto, so that they can loan it out and you can actually make interest off that, which is something I'm going to cover later on for Muslims, because Muslims, we don't deal with interest-based transactions. The liquidity providing, this whole token mining thing. What's it called? Not token mining. What's it called?
Farming.
Yield
mining.
Yeah. I mean, there's so much there. What is the first thing that a person coming into this should actually like just focus on? Because there's just so much right now. The technology is taking off so fast. I mean, me and my wife and I, my daughter's an artist. We found out about NFT. And so like, we're trying to get my daughter in this, and then we're trying to mess with this, and we're trying to mess with that. And it's like, we're going nowhere, it feels like, although we are making advances. So if a person wants some laser pointed, ways to like increase their wealth and, this type of stuff, what do you recommend?
Okay. At least if you're just starting off, just like ground zero, right? You have to get some blue chips in terms of, you have to get yourself a position in Bitcoin and Ethereum. Obviously, some people are, we would typically, if you're starting off, we'd go 50-50, but obviously some people, if you want to get a little bit more returns, I'd obviously be heavier on the Ethereum side. Then once you sort of get a ground basis for the portfolio in terms of like, okay, I've got some Ethereum now, I've got some Bitcoin that I'm not going to touch for a while now, because I've seen a lot of people just gambling around with their Bitcoin, right? At first, it's okay. I mean, it's with Ethereum being a little bit lower priced, it's a little easier to kind of get back and stuff. But with the Bitcoin, most people, they're not, Bitcoin's like almost $50,000. So it takes, that's some serious money. I mean, anywhere around the world. So obviously, people are dollar cost averaging into positions with that, and everyone's trying to get to that 1 BTC even now. So you can use Ethereum essentially to make outsized returns, as well as start going kind of down the ladder in terms of the market cap list into some really good tokens, Polkadot being one, synthetics. I know Aave might not be one you'd be able to you would like, because it's a lending platform, but it's decentralized, but it is a big part of Ethereum and just things, and you sort of get into things like that. From that point, once you get that part of the portfolio, then once these coins start kind of getting returns, then you can start rolling your money back into Ethereum and then into Bitcoin. But it just really depends on what you're really trying to stack more, whether your main blue chip is Ethereum or Bitcoin at the end of the day.
Yeah, I agree there. Generally, what I tend to advise to people is, well, if you want to start your portfolio, well, have the big 2 coins, so Bitcoin, Ethereum, into your portfolio. But before you start trading, I generally advise first invest into Dogecoin. By reason, low value, but it's kind of odd because I'm not entirely a fan of the Dogecoin in the sense that it's a good financial coin, I'm going to say, good sane investment, but it is a very good coin to learn about the market. Because of its low value, it's, unlimited supply, you can learn a lot about trading and reading charts without investing too much in it. Even if you have I wanted to say handful, but I don't know, 100 Dogecoins or something, it isn't that much money, and you can start reading charts, which is an experience you can use later on for other projects like Polkadot, Chainlink, Ethereum, Bitcoin, how everything moves. So that's generally one of the things that I tend to advise too.
Yeah, I like that angle. Just because Dogecoin, right, has a lot of volatility. And actually, if you watch it compared to Bitcoin, it has like one pump a year at least. I think 2020 was the only year in quite a while that Doge didn't really have a good pump against Bitcoin. And so, it has a lot of volatility, kind of gets people used to the market, like what's good about this thing that actually makes sense and what's absolutely ridiculous about this meme coin. So I think that's pretty interesting. And kind of get a good way to get people used to it.
So you're saying the blue chip should be Bitcoin and Ethereum. We're going to go into my topic here, and I might get heated. So guys, excuse me. Ethereum started talking about 1559, cutting miner profits, haters. And what do you guys think? Be careful, I can eject you. No, I'm just playing.
You got that finger on the mute button.
What do you guys think of 1559 and the future of Ethereum? Miners have one perspective, traders and hodlers, they have a different one. What do you guys think?
Well, all right. So I'm not a miner, right? I'm not a miner, and as a spectator in the market of Ethereum, right? I think EIP 1559 is like awesome for the price of the token, which most people care about. But with the increase of the price of the token, you're also going to get crazy fees as well, unless we get scaling or something like that. So it's this whole kind of give and take. I know they're pushing a lot right now into layer 2 with optimistic rollups and stuff like that. There is some ZK rollups exchanges like Loopring that are out right now. Actually, Loopring is actually really awesome. I really like it, but you do get dinged on the way in, taking your Ethereum from L1 to L2. Yeah. So that's still not the best, but at least when you're in that ecosystem now, you can try to trade around and pay almost nothing. I mean, literally, it's almost for free, pretty much. It's pretty cheap on most layer 2 right now. But of course, layer 2 is not really, there's not that much volume going through it just yet. So at some point, eventually, almost all the transactions will be on layer 2 at some point, I believe. But the fees won't be dirt cheap, but it'll be like a quarter. Or it's not going to be nothing crazy, because we don't have that much, in terms of like transactions just yet. So I mean, it's really good for the price, but you're right. It does make mining less profitable, but it does make it deflationary. So it kind of gives like a little more boxing gloves on ETH towards Bitcoin, saying like, hey, we're going down, or like our supply is going down. You guys are only inflating right now.
Yeah, I agree with that. I mean, for the price and for being competitive with the rest of the market, because the rest of the market, right, like Binance Coin's trying to come for Ethereum's crown. We have Polkadot, kind of helping along with Ethereum, but at the same time having some friction with it as well. And Cardano obviously being one that just wants to take Ethereum's spot. So you have a lot of these coins coming after Ethereum. And so I understand why they have to, continue to update and continue to stay relevant. The one thing which is, just in crypto in general, we're getting this big trend away from mining just in general, this huge staking trend, which I think is important for a lot of things. But at the same time, there's one issue with it, which is proof of work mining is the most secure way for a decentralized network to have security. It's 100% true. Right. So, that is going to get a lot of things like what we see with paid network, which we talked about on my show just like a few minutes ago, where you get a lot of these projects in the DeFi space, which get these, bugs and different things, and they just get attacked like crazy. And then boom, down to zero and project is done. Now, Ethereum, right, has been battle tested and it's been here long enough that probably won't happen. But at the same time, Ethereum is opening itself up for a little bit of attack vectors, right, by going to proof of stake. So it's kind of like Indiana Jones trying to change that, treasure without getting killed, right? So it's going to be an interesting thing to watch. But yeah, the attack against mining, saying like mining is bad for the environment and stuff, is kind of a lot of BS to me, just because look at these massive buildings, right, that JP Morgan has, Wall Street has, like, I'm pretty sure there's a lot more energy taken up by that than there is by, mining in general. So I think, it's good that Bitcoin stays on proof of work because it is the most secure and most decentralized cryptocurrency in existence. And so, at least that will stay. But yeah, I understand why coins want to be more competitive with the rest of the market as the rest of the market goes. So it's kind of like, there's a give and take with everything that you do here.
Yeah, absolutely. I don't want to derail this into like a mining thing, but for me, the biggest concern is because I just started trading. I'm a hodler also. I try and take part in DeFi projects as best as possible. I'm not just like, profiting and cashing out. What bothers me the most is obviously the largest bag that I usually hold is Ethereum because I mine it. And so what we're looking at here is that if they go to 1559, and I don't know why they feel the necessity to do this so close to coming up to ETH 2.0. It just seems like a really big thing to try and do right before you switch away from mining anyway. But my biggest thing is like, we're looking at roughly 40 to 60%. It can't be determined exactly of the network security being GPU miners for Ethereum. And if they move away from that, then you, like you said, opening up yourself for 51% attacks. And that could potentially happen if enough miners leave Ethereum. And then what happens to the coin? Then the exact opposite happens as opposed to what was desired, which is the coin climbing. We saw this with Ethereum Classic. Ethereum Classic had a nice little run, and then they just got hammered like 4 times, back to back by 51% attacks. And so the biggest fear in the Ethereum mining community is that they're going to open themselves up to basically 51% attacks. And all of us are generally hodlers and traders within the DeFi space. And so now we're looking at not only our profits being cut, but also what we're holding being cut potentially. We hope the best for Ethereum anyway, because we're huge holders of it, but it's a worrisome thing. And then we're looking at DOT coming up and whatnot, and everybody's looking to take their spot. All it takes is like one hit, and I think DOT would just swoop in and just
DOT. Well, I think the interesting thing is, like, I think Ethereum's biggest like competitors, or maybe just people who would like to put some money on it to try to take it down, would be CZ from Binance, and then Charles from Cardano. I think those two probably would get together, might put some cash together and try to do that 51% attack. But they have pretty good friends in different places, right? So they could try to do that. I wouldn't put it past them. But Polkadot is interesting. I actually think Polkadot is pretty unique in what it's trying to do, and is actually more beneficial to the entire crypto ecosystem in terms of that it complements more things in other cryptocurrencies than has like antagonistic vibes. So like how Bitcoin maxis were always like, oh man, Ethereum, it's some people like Dan Held called it inferium and shit like that, just because they do, man. The reason why is because when in 2017, when Bitcoin dominance tanked, right, they were like freaking out, like, what's happening with this stuff here? But what they didn't realize is actually Ethereum, right, is creating another, kind of area within cryptocurrency that is actually diversifying and strengthening the entire ecosystem, right? And then having that is good for crypto in general. And Polkadot's doing the same thing. So I think a lot of Ethereum people may view that as a threat at the beginning, but once they realize what Polkadot's trying to do with interoperability and helping all these blockchains to work together, share liquidity, all this stuff, that's actually going to be better overall for everybody in the crypto space. Whereas Cardano is just straight up just going for Ethereum's crown. So
well, with Cardano going for Ethereum's throat, it's one of the reasons. I know there are a lot of people who already told me, but you should invest into Cardano because they will. I'm like, no, they are too single-minded, focused on Ethereum, and I'm afraid that would be their downfall. Generally, because I know there are a lot of other projects trying to imitate the movements. They say, look at our successes, and my general response back is, well, look at the entire market. It isn't surprising. A lot of new projects, even incepted somewhere in 2019, are in an uptick by reason the entire market, I'm not going to swear here, the entire market is in an uptick. And the same is applying to Cardano, and I'm pretty sure they're now quite hyped, but I wouldn't be surprised somewhere next year, if the bull run is going to be over, that they might start tanking quite hard, and that Ethereum will remain at their position. Though I also have a little bit my reservations about Ethereum, because, well, I can see them losing their position as second biggest one to another project by reason with the implementation of EIP 1559 and, well, towards the Ethereum 2, rollout. And especially I've saw here in the comments, if the transaction fees remain that damn high for all projects built on them, I wouldn't be surprised many will say, we're going to change the project. We're changing blockchains. Ethereum, bye. We're off to somewhere else.
Yeah, we had
a variety of people already have done so.
Yeah, I mean, I think that's temporary, because I do believe they solved the problem with the fees. I mean, Bitcoin, right, in 2017 had the exact same storyline, and I just think it's a growing pain, essentially, just because. Bitcoin, I think it was like November of 2017, people were like, oh my God, $50-$40 fees on Bitcoin. This is absolutely ridiculous. Bitcoin Cash is the real Bitcoin. Bitcoin Cash, like Bitcoin at the time was like $5,000-$6,000. Bitcoin Cash was coming from like 400, getting up to like 2,000 or so, right? And people are like, oh crap, the flippening, it's happening, right? And then I was kind of freaking out a little bit. I was like, holy shit, this is going to be interesting. But then there's a lot of nothing, right? Bitcoin Cash wasn't done since then. We've seen that. So I think, not saying Cardano's Bitcoin Cash, not even close, but, I don't think they're going to take Ethereum's crown. But I think they're going to definitely try. And I think the interesting thing to watch is kind of like how Binance plays it, just because CZ has a lot of resources, and he's more centralized, so he can kind of come at it in a different way. And he has some friends in high places, but the kind of counterbalance to that is that Coinbase is trying to go after Binance. So there's kind of like, a circle of these guys like trying to go after each other. It's interesting.
It's the nature of the crypto market. It's still a wild west out there.
Yeah,
that's something I mentioned quite frequently, even in some of my posts, some of my remarks, where I say, well, the market is still relatively new. And most are like, yeah, but it's a decade old. Yeah, I know one day on the internet is already ancient, but do keep in mind, only 10 years old. Keep in mind, the current financial market's centuries old. It's still got a long way to go. And, well, it's still the digital age commencing, like I dare say.
Right.
Especially for crypto, we have to keep that in mind. So anything goes.
Let me take this another way. So now we're seeing, of course, the cops want to drive by. This is America. I'd be worried right now. I'd be like, oh.
Again.
You got your crossbow, right? No problem.
Okay, so we got guys that aren't understanding. Right now, we're seeing a massive transfer of wealth on sort of like the Wild Wild West in a new wealth age. Right now we're in the early adoption stage of like cryptocurrency and whatnot. And we got people out here saying that, this is, it's too late to get in. We had people saying it was too late to get in at 1,700. They had people saying it was too late to get in at 5,000. It is too late at 10. It is too late at 20. And it's too late at 30. They're going to be saying it's too late at 50.
Yep.
And then you got those people who are standing on the side like, yeah, this is going to crash just like 2017. So before I segue into the next question, is this going to be anything like 2017? Or we're seeing this skyrocket? We're seeing these corrections here and there, but we're still seeing a climb. Well, what do you think is going to happen? Is this going to keep on going up? Is it too late?
It's going to see. Like we're still in the beginning of the year. Like let's just say worst case scenario, right? Worst case scenario, this market would start topping out just like last time. I mean, I don't think it's going to be an exact mirror of 2017, but if it is an exact mirror of 2017, we're just in the beginning. What's March 6th. So we got the whole year up pretty much. And to tell you the truth, most altcoins didn't really even top out until like December to about Jan to February, around there. I think EOS was the last one to top out, which was in February, like beginning of February, if I remember right. So of 2018. So we have quite a lot of time. I honestly, I'm more on the boat that we're actually kind of lengthening out a little bit as well, because it isn't just retail. It's not retail money coming into the market this time. We are starting to get retail now. Where if you look at some of the Google trends, you're starting to sort of notice Bitcoin interest is starting to go up like this a little bit, but it's not like huge like peaks and stuff in terms of like search volume for Bitcoin. So it's mostly kinds of institutions and stuff. Obviously, Michael Saylor and everything like that. He ended up getting Elon Musk to finally start investing, and you're going to start seeing more and more corporations start buying up Bitcoin right now. So they're really setting a floor. I think he just did a post on Twitter the other day that his average buy on Bitcoin is like $22,000 right now.
Something like it, yeah. Mentioned too.
Yep. Yeah. So he got in really low. So and then they also have an incentive to actually keep, like someone like Elon, right? They have an incentive to try to keep the price above where Elon even bought it anyway, because it just makes the whole industry look really good. So that's why we got a pretty good floor, above like $41,000 or $39,000 at least, where Elon got in. I think he got in at 37, if I remember right. But it's that sort of thing. So we have a lot of time. The more likely scenario is that we maybe top out possibly in the summer of next year to maybe third quarter, I think, and then sort of just start kind of bleeding out into the end of the year. But that's in 2022.
Yeah, that's a good run.
That's a good run. But I don't know. Me and Charlie probably really expect this. We are going to see some big correction somewhere in the summer, obviously, because it's going to get very hypey right now. You're going to have Ethereum launching EIP 1559, optimistic rollups. You got the Polkadot ecosystem about to do their ICOs, or we should call them, we should call them auctions, right? But parachain auctions. You're going to have every project and their mom launching something around the same amount of time. So it's going to be a very hot, basically quarter and a half in cryptocurrencies. And when things get that hot, eventually you're going to get a little correction of people taking profits and stuff. So that's kind of what I'm seeing. I mean, I'm really bullish right now.
Yeah, and then if you look at like the long term as well, right? The decade. I mean, this is one of the way I tell people who are newer to crypto, right? It's one of the best long term savings accounts in the world, right? If you take a look at any other asset in the world over the last 10 years, Bitcoin's outpaced it. So just buy some Bitcoin, hold it for the decade. Don't worry about the dips, higher lows all the time, right? Don't look at the highs, look at the lows, and then just keep accumulating some for the long term. And then if you have that in mind, then once you start seeing the appreciation price, you can learn the other things about it and then maybe get into some of the other aspects, and once you have some profit, then you can take a little bit more risk. But until that time, just kind of take it slowly and just dip your toes in the water, see what it's about. I bought about $1,000 of Ethereum when I first got in. And then when it 4x'd, I was like, all right, well, let's put in a little bit more. And, then I've been learning about it ever since. I think there's, everybody kind of comes at it a different way, but everybody always, I mean, in my experience, most people's story, usually it's like, I heard about it, I ignored it, price went up, I paid attention, and then I bought it. And then they get on the ride, right? They get on the roller coaster. So I think not everybody gets to it the first time they hear about it, but eventually by the time we get central bank digital currencies coming out in about 2025, 2027, everybody and their mother is then going to be, whether they like it or not, exposed to blockchain technology and cryptocurrency, what's working behind Bitcoin, right? And they'll know how to send a digital currency to a wallet on your phone, to a potential cold storage wallet that you hold in your house so you can have a little cash, within your possession, right? And when they know how to do that, it's not going to be such a big hurdle for them to get into crypto at that point. And then you see a lot of people kind of coming in. And the funny thing is, people are more comfortable buying something that's more expensive than they are buying something that is cheap. Mm-hmm. It's weird. It's really weird part of human psychology. So, when Bitcoin's stable at $100,000, people are like, oh, okay, now it's safe to get in. It's gonna be the way it is, I guess.
I've got to admit, I was quite happy with the predictions dollar cost crypto made. To be honest, it was something I had in mind a little bit my doubts about, but viewing the market and etc., I had to draw approximately the same conclusion. So I'm quite happy he eased my mind, I'm going to say, in proper English, and confirm a little bit my suspicions. From what I can tell for the next couple of weeks, I'm slightly afraid the market is going to remain stable, not immediately going up. By reason, with the news of Ethereum, I think many will await until the EIP is going to be launched, and that the only support will come from a corporate either jumping in or trying to remain a steady level. And it might be the case I'm wrong, because I also said in December, Bitcoin will not immediately reach the 50,000, but I did not expect corporate suddenly getting into it big time like it did. Right. And as soon as I saw it and it surpassed the 30,000, I was like, got to withdraw my predictions, which were faulty. We're going to reach the 50,000 easily. And it did 2 weeks later even. So
one phrase I remember always in trading, right? Just thinking about price in general is there's never a price that's too high or too low to buy or sell, right? No. So you're basically looking at the specific price is kind of something that gets people kind of thrown off a little bit in terms of like, is it really worth this much? Is it not? And so you get people from different angles, like the corporate saying like, we want to hold it above this price to feel secure. But then also retail in general has been getting in just in the last couple of months. So their way of viewing the market is very different from ours, because they're just looking, a couple of months ago, it was $700. Now it went to 2,000. Now it's 1,500. Okay. So if this thing goes below $1,000, I should buy it, right? Because it'll go eventually up past 2,000, right? That's kind of how I think newer people to the market are probably looking at it. And so that I think retail as well is a very good group of people to kind of support some of these levels on the coins too, because they see Elon tweeting and saying, I bought my Bitcoin down at 20,000. Okay, well, if it gets down there, I'm going to buy where Elon bought, or I bought my Bitcoin at 35,000, right? They're going to be like, yeah, exactly, right? It's too late. But if it happens, right, if it gets anywhere near there, they're like, oh yeah, he bought at this price. So they just kind of follow that herd mentality. And so they kind of also help the price to kind of stay above those levels. So, but I agree with you, kind of in a sideways market for the time being.
And that's the important part of understanding and reading the charts, because there's a lot of people, And I've got to admit, it's something I also learned from experience when I jumped into cryptocurrency with Bitcoin. I was like, ooh, it was back in 2018. Ooh, price is going up. I'm going to buy in. I did so. And well, in a couple of days, I saw my yields going like that.
Mhm.
And it only took a few months later, when markets were correcting, that I finally saw some profit. If I weren't as hot-headed back then and said, yeah, well, I'm going to sell it, with a loss, well, I would have made a loss. But since I kept it, well, now I'm nicely sitting on 10 times my investment made. So
Hell yeah.
I'm quite happy. And it's also one of the philosophies that I say and try to teach people. Do not look at the value, look at its historical value. See how the
Correct.
market is moving. If it's a bull run, yeah, you're already too late to invest, because you need to position yourself before it goes up. When's the best time? When it's going down, or that level.
Yes.
Which implies,
100%.
if I'm not mistaken, right now, last couple of days is actually quite a good time to get in.
Yeah, definitely. I'm liking the price right now. I mean, it's at Bitcoin's at 47,500. I'm like, ooh, it's a nice discount, right? So, yeah, things are looking good.
Okay, so I got a question here from Abu Future Trunks. He says, what are some of the key advices that you give someone that's been trading crypto for a few weeks? Let me say this. Follow that link I keep on dropping in the comment section. You will learn it all there. Don't be coming in here asking for industry secrets, my man. Abu Future Trunks, longtime supporter. Love you to death. That's what they're here for. Promote the course. Get in there. Get that money, son. I've been telling you guys for a minute. Now's your chance.
Yeah, take a look at what Suleiman said in the chat, right? He's Forex his Moonbag through the course and stuff like that. I mean, the course is only $697. Like, it's a pretty affordable course, and we have 20 webinars, which are 2 hours recorded, and then we have 2 hours after that, twice a day of non-recorded portion where we have open Q&A. So it's really a crash course, right? A high-level crash course for everybody at any level. So we help everybody out with that, and I have not yet met anybody who has not made more money from following our information than the course costs. So essentially, if you follow the information and at least pay attention to a good portion of the course, you don't have to follow everything to the T. And as long as you pay attention to this stuff, we have a few webinars on what not to do in crypto, which is almost more important than what you need to do, right? So as long as you understand our warnings, right, then you have probably like a 90 to 99% chance of making more money in the next quarter from the course than the course costs. So to me, that's a no-brainer.
Yeah, definitely need that. You know, I took a random risk. Just I'm not saying anybody should do this. There's no financial advice, but I took a risk on a coin recently. I was talking to Miguel in the back about it, and I kind of lost some money on it so far. I'm kind of waiting for it to go back up. It's up like 0.062%. I'm like, just keep climbing so I get my money out of there, you know. But I put some of my ETH bag in there, you know. Because I'm learning this the hard way. I'm going like YouTube here, there, the other, and there's so much information out there. It's hard to get it condensed and into one spot that actually gives you everything you want. And this is what everybody's always looking for. And now you got the shortcut to the game. So guys, follow that link. Go ahead and register. Get up in there. Do me a solid. Do yourself a solid. Get on the course. Moving on. So what did I write down here? Yeah. So now for me, most of my crowd are Muslims. And so what we're looking at generally, a lot of Muslims, we're looking at permissibility and impermissibility, the halal and the haram of like working with cryptocurrency. And for us, a big thing in any sort of money transaction is that it can't be connected to usury, interest-based transactions. What would you tell a Muslim who's looking to like avoid that in terms of like, you know, when you go into the DeFi space, especially into the DeFi space, you know, where they're lending and whatnot and all this type of stuff, what should he actually avoid?
So
go ahead, man. No.
So I just had one question with it. So when the way they classify usury, something like an Ethereum, which you're not really actually you're getting interest payments, but it's from inflation instead of actually like charging people for owning their money. Is that okay? Or
this would be considered like money trading. Money trading is okay. That's not really considered to be an interest-based transaction. That's like, you know, buying low, selling high. This stuff is okay. This is acceptable, you know. But like if you let's say you lend money or you facilitate the lending of money or borrowing money, and there is interest put on top of it, so you gain interest or you pay interest, these things are impermissible. But like, you know, buying low, selling high, as long as it's not excessive in terms of products, which we're not talking about here, you're cool.
Okay. So what I'd probably recommend for someone like that, then it would, of course, staking maybe Polkadot or Ethereum, because that's all inflation pretty much. So that's fine. That should be fine, and it's a good way to get yield. Something like a synthetics, actually, you can stake synthetics as well. And that also pays you a lot of inflation as well. That's I think currently the inflation rate is like 12%, but only 38% of the supply staked. So the APY is like 24% or so. So it's a very high APY, but there is caveats to it. So when you stake it, so whatever week we're in right now, you'll get it 1 year from now.
So it's locked in.
So it's locked in. So so this is where I kind of have to get into kind of not semantics, but in terms of like, let's just say something like a synthetics. You're actually, so in order to do that, you have to borrow money from yourself. Is that okay? So like it's so you ever heard?
Yeah,
myself.
So it's called like a collateralized loan. So imagine we have like real estate or something, and you want to borrow on your real estate. You own it.
Yeah.
You take a loan against your own house. It's
okay.
But there's no interest. There's really no interest payment on it in this network. It's just if let's just say you put $100, you're just borrowing $20, no interest, and then you just that's the sort of thing in that system. So that would maybe be okay, but that's sort of on the borderline for somebody as well too. So it's like that's where I have to get into that. Then in terms of like altcoins, you would probably be really well maybe just getting a sort of just buying the token itself. Most of these tokens do not generate yield unless you put them on a certain app or something like that. So I think holding the tokens, just buying them cheap and then just holding on to them, I think you'd be able to make quite a lot of outsized returns. The thing you have to just watch out for is because a lot of people are getting interest payments. You have to watch out for, you have to go into tokens that their inflation rate is not that terrible, because the inflation steals upside for you, because everyone else is getting the interest payments, so they're getting downside protection as well as the upside from the price going up. Yeah, so tokens with lower inflation is probably what I would probably recommend it to people who can't use things with like usury and everything.
Yeah, that's quite important in the DeFi space, because a lot of the coins, because they have those staking features in those areas to gain interest, they're on purpose baking in inflation behind the protocols to kind of counterbalance some of that interest that people are gaining in the coin. And a lot of people don't notice that when they're buying the coin, right? So I think that is an important kind of feature that is kind of a little bit hidden from view. And so yeah, for those coins like he's mentioning there that maybe don't have as much inflation, you could just buy and hold those. Maybe that's like 80% of your portfolio is just a buy and hold strategy for stuff that has good volatility, but is relatively like blue chip or safe compared to the rest of the market. So really understanding how to figure out, okay, is this coin something that's going to last for a while, or is it just a flash in the pan that's good for this week, right? Understanding the difference between those is also important when you're kind of making that portfolio. And then, 20% of your portfolio, you can try to get those bigger gains by doing maybe a little bit of trading or by doing a little speculation on some of these coins that maybe can grow a little bit quicker. But, that should be a minimum portion of your portfolio. The main portion of your portfolio should be that long-term strategy.
Okay, nice. Thank you. So for the guys that want to get in the course, and you should want to get in the course, guys, is there like a brief, like, from start to finish breakdown you can give us, like chapter headings or something, what guys should be looking forward to? Sure.
Let me just pull it up here. We've been talking about a lot of things that we're going to be doing in the course, but I'll just kind of give you guys like a little bit of an idea of some of the stuff that we're looking at. So we have, obviously it's me and Dollar Cost Crypto, right, Miguel, who are, doing the course. We have it's 10 a.m. and 10 p.m. Eastern every day from March 12th to the 23rd, with 2 days off in the middle. The first third of the course, it's 20 webinars in total. The way that we structured the webinar is the first 1 hour is the subject. The second 1 hour is the Q&A on that subject. Then we stop the recording. We have an open Q&A for maybe an hour or two. People don't have to be there the whole time. We record them, and then you can get the recording afterwards. But the types of things that we talk about. So we have some guests coming on. We have a guy who is a master in the NFT space, so non-fungible tokens. Anybody trying to figure out that space? We got a guy who is basically making really good money in that space. I can't say how much, but a good chunk of change. And we actually had a guy from the last course who became an NFT artist, and he did his first sale on March 1st and made 5.5 Ethereum in profit.
Nice.
Yeah.
Yeah.
And the course is only $6.97. So any artists out there. We also got a guy who's taking care of tax information. So he's a tax professional in the United States. So that's for more people in the US based, but we will talk about maybe generally across the world tax information as well. Then we have a guy who's going to be coming in talking about privacy with crypto. And we have another guy who's coming in who's actually been connected with a lot of projects from the beginning, including Aave. He helped start the Aave project. And so he's connected with a lot of people in crypto. He's going to be coming in there giving a talk. And then we have things with decentralized exchanges. Like I said before, fundamental analysis through YouTube and different research tools, technical analysis basics, so you can be literate with the charts, talking about getting in and out of the bull market. I mean, we cover everything. So, and that's not even everything. So
yeah, it's literally A to Z, and we take people from advanced, intermediate, and beginner, and we can take beginners from like knowing nothing about cryptocurrencies to actually being pretty proficient and actually being able to go get their own cryptocurrencies independently on DEXs and everything. It's pretty wonderful, because I know quite a few people that they say they want to get into crypto, and it really takes them almost a full year before they're even kind of wheeling and dealing around in the space independently, because it's a really big space, and it's all the information's out there. But the problem is people don't know where to look, as well as they are not taking it as seriously as they should. So a lot of people are just kind of lollygagging around. I'll get some Bitcoin, and then I'll get that coin. And by the time they get into these coins, the prices have already went like that already.
Yeah, lost opportunity.
The classic problem, I'm going to say.
Isn't it? So, and people can look at these videos and whatnot at any time, or is this just for that window of like the quarter? So if a person like has a question in his mind, he didn't take proper notes, he can go back and play this stuff back and be like, okay, boom, I know what to do in this situation now. Is
exactly.
Is it like that?
Yeah, exactly. Right. And we keep they still have access to it past the quarter as well. So let's say, for example, they're looking to study something for a longer period of time, and they need to come back and review some things every once in a while. They're always able to have access to the recordings, as long as those recordings exist, right? Everybody can kind of take it at their own pace. And we've had some guys who have made more than their annual salary 2 times over within the last couple of courses. So there's people now who are
Are these people working McDonald's as fry cooks?
No, one guy is he's a
I'm just playing, bro.
No, I know you are. It's all good. No, one guy is literally, he has his earbuds on throughout his work, right? He's a healthcare professional, and awesome story. Like, he basically was not from a family that has a lot of money, essentially. And then he listened to our show for free on YouTube for several months, made about 20K in profits, then started doing consultations with us, took the first course, and now is basically sitting on a very prosperous chunk of change. I can't say how much, of course, but it's in the 6 figures for sure. And he didn't start in the 6 figures.
I think he's in the chat.
Yeah, nice. Yeah, exactly. So I mean, we've mentioned his story a few times. Yeah, we already have. Well, I mean, this is another guy. This is, we have a lot of these stories. It's not.
I mean, your crew's in here, and they just like make it. I'm going to get in this course. Can I pay an Ethereum, please?
Yes.
Nice. You can count me in. I'm going to be there. Abuamerican's going to be there.
Get you my QR code.
Yeah, I'm probably going to join too, because you were talking about NFTs. I've got good knowledge of it, but I want to get more into it. So yeah.
Awesome. Yeah, we'll get up with. We actually have links to one of the guys who's probably one of the better known guys in the NFT space, and he actually has links to Barry Silbert, who's the head of Grayscale Bitcoin Trust. So yeah, pretty interesting. In crypto, there's not like, if you do the 6 degrees of Kevin Bacon or whatever, that game where you're trying to see how far away you are from other people, there's really only like 1 or 2 steps away from most of the major players in crypto if you meet the right people.
Wow.
So
Voice My Ambition has a question. Liquidity mining isn't risk free. Oh, that's not a question. No, it isn't risk free. It's called impermanent loss. Yeah. Yep. No, sorry, I thought that was a question. My bad. Yeah, that's a different topic. I thought it was a question. I thought he was asking, is it risk-free. So in the course, a guy's looking like how to pull out, and you talk about taxes or whatnot, but and I'm not suggesting anybody do anything illegal, but on the mining side of the game, I avoid uncles of all sorts, Uncle Sam, Uncle Helmet, whatever else. Now, I'm not saying you guys are suggesting that people should pull out their profits and not pay uncle or aunt. We've got Angela Merkel here. They're cut. But do you cover how to pull out your profits and whatnot and this type of stuff, and how to go from like markets, this, that, the other, to actual fiat currency that people might want to use to buy houses or boats or, you guys cover that stuff?
Yeah, we cover all of that. We do have it, like I said, a tax professional from the U.S. coming in who's worked in several different areas. He's worked for the government related to tax. He's worked in the private sector as well. And then, we bring him in because we need somebody who's a professional in the space, right? We're not tax consultants, so it's kind of irresponsible for us to be giving too much information on that, but we do talk about that from the professional's point of view. And then we find information for people to go out and do their own research in their own jurisdiction, because there's a million tax laws globally, so everybody kind of gets in a different space. But I agree, it's like, don't pay what you don't have to pay in taxes. Try to find the best way for you to pay your taxes, be above board, but then at the same time, right, make sure that you're taking care of yourself.
JJ says, well, Allah, uncle doesn't have to know. Well, Allah means I swear by Allah, he doesn't have to know. I agree. Actually, one question. Rishi, sorry, bro. Rishi asked, is liquidity mining risk-free? And I talked about impermanent loss. Can you just do a quick run over on impermanent loss and liquidity mining?
Sorry, I was muted. With what's called liquidity pool mining, impermanent loss means, let's just say you have Ethereum on this side and a coin on this side. What could end up happening is that one side has too much buying pressure, and you end up having a smaller amount on one side. So when you pull out your liquidity pool tokens, you'll end up with more tokens on one side, and that's the impermanent loss. Typically, if the person doesn't care, he's like, "Oh, cool, yeah, I have more of the token I wanted, great." But sometimes people are doing this as a way to generate yield, and you could end up losing your Ethereum, and that coin value starts going down, and then you have a net loss at that point. There's also things too where this is a big risk and stuff with like liquidity pool mining is let's just say you put Ethereum and some S coin, right? And the person that owns all the S coin can just dump all his coins on one side of it and just completely drain your Ethereum, and you hold all the S coin, right? But that's the problem, is that now you have no Ethereum and the S coin's value just went to zero, and essentially you've just lost all your money. So there's a lot of risks to stuff. So some of the pools that pay the best are the ones with the riskiest coins and the thinnest amount of liquidity as well. So it's likely that you're going to lose Ethereum on a lot of pairs and stuff. So you have to be very careful. Obviously, there's safer pairs like maybe like Ethereum to USDC, which is a lot safer, but then the yields are lower. And also the one negative with liquidity pool mining as well is that the more money that's in the pool, the smaller your yields start going down, because it's essentially you get the rewards based on your share of the pool. If I have 1% of all the liquidity in the pool, I get 1% of all the rewards, all the fees, as well as any incentives that are put on top of that pool, depending on the token. But as more money comes in, let's just say I own 25%, and more money keeps piling in, I keep getting smaller, my rewards are going down as well. So these are sort of the risks. But typically people who are just trying to like ape in real quick, they get in right at the beginning, and that's when they can make some of the biggest gains. But there's a lot of risks to it. So with high risk comes high reward. But most of the times I see it's mostly just high risk, to tell you the truth.
Yeah.
Gotcha. Nice. You guys ain't got much time. You guys are busy. You're like on this run with this course and everything.
Yeah, just FYI, people are heading over to Donovan Sharp's channel next. If anybody wants to keep on us with this crypto tour, head over to Donovan Sharp's channel next.
So guys, if anybody wants to get a hold of you and everything, I've been dropping a link in the thing to join in the chat. So you guys can join the course. Anybody wants to get a hold of you guys, whatever else, got any specific questions? Do you want to hear from people if they want to talk to you? How?
Yeah, they can email me at charlie@cultivatecrypto.com. If you go to my website, cultivatecrypto.com, scroll down to the bottom, there's my email. They can also head to my YouTube, Cultivate Crypto. They can also head over to Dollar Cost Crypto's YouTube, Dollar Cost Crypto. They can check us out on Twitter as well. We're active on there with same handles. So reach out. we do get a lot of people reaching out to us. So the email for Charlie at cultivatecrypto.com, if you have questions, is probably the best so our team can take care of that message. We may not be able to get to every individual message if you're asking some questions, but if you do get in the course, we'll be sure to help you out.
Okay, awesome. Guys, we're going to call the show right here. I got just like a few questions to ask these guys in the background side of the game. You guys can't get on that one. Sorry, guys. So we're going to close this out. I really appreciate you coming on. The first person, just so you guys know, the first person I asked to be a guest on this show when I started it was Charlie. The guy down there, Charlie.
Like that.
So I was actually, just like on fire to get him on the show. So I appreciate you guys coming on. Inshallah, I hope to have you guys back on. And thanks for showing up, guys. We are out.